Let's focus on some global important news now. The US and China will meet in Washington to try to find some common ground in their escalating trade war. It's the third round of hearings on tariff proposed by the administration. However, Trump does not expect much progress from the trade talks. Trump said in an interview that he had no time frame for ending the trade dispute with China. Meanwhile, American companies and trade groups are returning to Washington hearing room mostly to argue against more tariffs from the President Donald Trump. Dehn, head of research at Ashmore Investment Management, is now joining us to try and understand about this. Jen, what is the sense that you get about this meet? Do you think it will be an important one, that most of the people would be eyeing out for?
This is an important meeting. It's an important meeting because one of the reasons why the dollar has gone up so much this year is precisely because of the threat of protectionism. Higher import taxes in the U.S. Means that that the U.S. imports less from other countries, fewer dollars flow out of America. That creates a shortage of dollars overseas and pushes up the dollar. And of course, when the dollar goes up, a lot of people all over the world get very nervous about everything. So protectionism and the outlook for protectionism is very important for global sentiment going forward. This particular meeting is a preliminary meeting of a technical nature, the intention of which is to build up and create the basis for a high-level meeting sometime in November between Xi Jinping in China and Donald Trump in the United States. It is an important sentiment shift caused by this, but my expectation would be that we will not see a dismantling of U.S. protectionist measures, although I do expect that we're going to see a gradual diminishing amount of protectionism going forward. And the reason why protectionism is gradually going to level off rather than come down is because the economic cost to the United States is going to start rising significantly, and the Chinese on their side are not interested in escalating beyond what is required to maintain a sense of dignity vis-a-vis the United States. So it's really at the margin, the economic cost to the U.S. that is gradually going to become greater and greater as protectionism rises. And remember, once we're past the midterm elections in November, then it's all about the next presidential election 2 years later. And given the late stage of the U.S. business cycle, the possibility of a slowdown in U.S. growth over that 2-year period leading up to the election increases all the time. And at the margin, protectionism could be what pushes the U.S. Into a recession. So I think there's going to be a lot of pressure from industry groups, lobby groups, and Congress on the Trump administration to try to find some kind of deal that enables businesses to feel calmer about the outlook for protectionism going forward.
Right. But you think that protectionism is the key risk to growth? Because how do you grow? You grow by exporting much more, much faster, and creating a much bigger market than what you're already catering to.
Protectionism is, at the margin, the single largest risk to growth in the United States, in my opinion. Not only is it incredibly damaging for the efficiency of allocation of resources, it also, more importantly, pushes up costs in the United States economy. And remember, the U.S. economy is running at full employment, and the Trump administration has just launched a massive fiscal stimulus at the point of full employment, and the Fed still has negative real Fed funds rates. So we're in an environment where the risk of overheating of the U.S. economy is extremely high. The reason why it hasn't happened so far is precisely because factor markets, labor markets, product markets are highly globalized. So it's very difficult for any particular segment of American industry to raise salaries or raise prices for goods, because if they do, they will just immediately be outsourced to other countries. But the moment you put protectionist barriers around the country, then you are in effect ensuring that all those markets are national markets instead of global markets. And that means that supply constraints become binding immediately, and then immediately you start seeing price pressures. And if price pressures then rise, well, then the Fed raises rates. So the causality goes from a country at full employment, but with low inflation, suddenly creating inflation by cutting off its markets from global markets. That in turn requires the Fed to raise rates, and it's the rate hikes that then push down the economy.
Right, John. Thank you so much for taking out time for us and telling us about what do you expect of the meeting.